Arturo and I are with Escobar Homes and Family with Keller Williams, and we are realtors. So we do these monthly workshops, and we have a subject that we think will help the community. So today we are talking specifically about your first home and the process that from the very beginning, from the moment that you are thinking about buying your home to the very end when you actually buy it. We want to go through that whole process today. Arturo has been a realtor for over 20 years, and I joined him 6 years ago. So we're both realtors, we're both licensed realtors. And so we work together with people to help them buy or sell their homes. And we wanted to help you with the process just so you can familiarize yourself with what it is and what to expect throughout the whole process. So we would be interested in knowing, before we get started, Alejandro and Gabi, do you have anything specifically that you would like to know or find out about during this process? Any questions that you have specifically?
No, I think just the process.
Okay.
Of how to prepare yourself, I guess.
Mm-hmm. Okay. And Gabi, what about you?
I would say the same. The process, obviously the down payment, because it's the closure also that you have to think about. Mm-hmm. For right now, that's all I could think of. I guess if I come up with something pops out, I'll ask.
Okay, absolutely.
And yeah, that's and you have any questions, please ask it, and we'll respond it, or otherwise we'll figure it out later and get back to you. But in general, we are going to be talking about the process, but each person, according to their finances, their job history, credit history, and all of those things is different. But what we're going to cover here is in general what the process is, and then individually we could determine what applies to each person in their own situation.
Okay, so just so you know, we're going to be talking about some of the fears and facts about buying a home. We're going to talk about the realities of the market today. 6 simple steps, and this will be really helpful when you're talking about the processes. 6 simple steps to home ownership. We're going to talk a little bit about financing so that you know what the financing process looks like, and then the next steps. So let's start with the fears and facts about buying a home. One of the fears that come to mind when people are thinking about buying a home is, can I afford that? I can't afford. I'm afraid I can't afford to buy a home right now.
And if you can afford paying rent, the way the rent prices are right now, you probably will afford to buy a home. But the truth is, until you sit down with a professional and go through the process of learning in detail with your actual situation, financial situation, you cannot determine whether you can afford it or not. So the best thing to do is sit down with a professional, with your lender, with a realtor, with your lender, and then you will find out whether you can afford it or not.
Another fear that people have is, I should wait until the market gets better. We've heard a lot of stuff going on in the media and the news about what the market looks like, and we'll talk a little bit more about it in further down the road. But for now, that is one of the fears that people have. Should I wait till the market gets better?
And there is no bad time to buy a home. What we as professionals make sure is that when you buy a home, your payment is the amount that you can afford to make it monthly. So, because if you buy a home right now, some people say houses are too expensive, interest rates are too high, and all of those things in a way are true. But if you buy your home and you can afford the payment, that's all it takes, because the house will increase in value as time passes.
Another fear that people have is, I don't have the money for the down payment. Apart from the process of making the monthly payments, it's, how much do I need? How much do I need for the down payment? And that's a fear that people have, that they may not have enough for the down payment.
There are a variety of programs available for home buyers right now that start with 3% down all the way to whatever you can afford. So just as a simple example, a $200,000 home, you will need $6,000 or $6,500 as a down payment. And then there are programs that help you with the closing costs, financial help with the down payment and closing costs. So really, there are so many programs and so many different ways that the down payment and the closing cost can be covered.
So the other fear that comes to mind is that sometimes, when you've looked through Zillow and you've looked through different places, you have in mind, some of us will have in mind a dream home, something that we really want to be able to move into. And then the fear becomes, I can't afford to buy my dream home. So is it a good idea to wait till we can afford that dream home?
The best way to get to your dream home, as we say, is to buy your first home. Your first home could be not as good as or as beautiful as you want to, but that will put you in a financial situation, and you will start stepping up to that process in which you will finally get to your dream home. Because once you buy a home, it increases in value. 5-6 years later, you can sell it, and then with a larger down payment, your job situation may have improved, so you can afford a bigger home and a beautiful home in the future. So the best thing is to start with what you can afford right now, with the payment that you feel comfortable with, and then work on fixing it or repairing it or investing a little bit, and then you will make good money when you sell it.
There are many reasons why to buy a home now, for example. Some of them are general and some of them would be according to your specific situation. But the three basic ones, the first one is the interest rate.
And everybody is aware of 1 year, 2 years ago, interest rate were down up all the way down to 2.5%, 3%, and that was a dream. That was beautiful. Right now we are around 5.5% to 6%, which is an incredible interest rate still, because I remember I started in real estate 20 years ago. Interest rates were 15, 17%. So it is still a good rate. And the most important thing is that your financial situation will determine the payment that you can afford. And based on your income and based on your credit, based on the interest rate, we can determine how much you can buy and how much you can afford in terms of the payment.
Okay, the second is your long-term investment grows, and Arturo's have been talking a little bit about that, but your equity builds up. In general, while the market may fluctuate in many things, the length of the time that you're in the home determines the amount of equity that will grow. And there's value appreciation and debt pay down.
Mm-hmm. In a normal market, houses appreciate between 3 and 5% annually. So in a $200,000 home, you could build equity up to $10,000 a year. To me, that's a great investment, because how can you?
Where else can you get that kind of?
Yeah, where else can you get that kind of money, right? So, but in the last years, we have seen houses increasing in value in some areas up to 15%, which was amazing. So, but normally the value of the property increases by between 3 and 5%, which if you are affording, if your payment is affordable, you will still need to live somewhere, and instead of paying rent, you will be making yourself, you will making payments to your own savings, basically.
Mhm. And the third reason is the pride of home ownership. There is a certain level of stability and security in owning your own home. There's a sense of community. There's a freedom to make the changes that you want in your own home. There's tax benefits. There's wealth building.
And the security that nobody's going to be pushing you out when they, if you rent, at the end of the lease, the owner could say, I'm going to sell my house, so please move out. And you never know when they're going to say, no, we're not listening to you anymore. And then all of those situations that come with moving to another home, different neighborhood, different schools for your children, if you have children. There are a lot of things that happens when you are moving from to a different home.
And let's give you we'll give you an example here of the owning versus renting. So let's say, for example, you purchase a house for $250,000 and you pay, and every situation is different, but let's say you pay $1,200 per month towards your mortgage. That will give, in 30 years, you will have paid $435,000. Now, you own that asset, and that has grown in value well over the amount that you paid for it. Now, let's take the renting situation. Everyone has to live somewhere, like Arturo was saying, right? So let's say you're paying $1,200 a month, and that's toward your landlord's mortgage. You're still paying, in the end of 30 years, you're still paying $435,000, but you don't own any of that. That's been given, right? And that $435,000 that you paid toward your rent is assuming that your rent never went up in 30 years, which is highly unlikely, right? So you might have actually ended up paying more than $435,000 at the end of the 30 years. And that's a very broad example, but it is to scale, it is true. So just like there's reasons why you should buy right now, there's also reasons why you may want to hold off. And one of those reasons is changing jobs.
Sometimes your job is not that secure. Maybe the company is not doing good, and there is the possibility that you may be laid off, or you are in a new job situation where you don't know if you're going to be stable there, or if you're going to like it, or if the benefits are good enough for you to keep that job. So if there is some instability in your job situation, I think it's good to hold the process of buying, so that you are in a better place in terms of your job when you make the move.
The second is financial. Sometimes there is a problem with credit scores, or maybe your credit score is too low, and they will bring you a higher payment that you may not want to pay at this time. Or you may have accumulated some debt that it would be better to pay off before you move on to purchasing a home. Or you may not have enough for the down payment, and you don't want to get stressed about that. You may want to hold off. The important thing for that is to speak to a loan officer who can help you figure out what those numbers look like. Now, sometimes people think that they can't afford to buy a home, and then when they actually talk to a loan officer, they find out that they can. Sometimes they find out that it's not the best time, but the loan officer also helps them create a plan so that they know when they will be able to afford to buy a home. But that is the financial aspect of it is one of the reasons why we might want to hold off buying a house. The third one is that it might be too expensive.
And yeah, housing has increased in value, and houses are expensive, but also rent has increased in value. And then the instability, the renting. So the investment of owning versus renting is completely different. And the most important thing, even though houses are expensive, is that we choose a home according to what you qualify in a payment that you can afford. That's it. If you can afford a payment, just like you can afford a rental payment, you are in a safe position. It doesn't matter how much the house is. And you are, again, benefiting from the increase in value and the equity that you're building by paying down the mortgage or the principal on your house.
In general, the payment of the house should be between 15 and 20% of your income. So once you get over that amount, you're looking at different stress factors that you don't want to have. So with your loan officer, you will see how you can keep that low. What does that payment look like when it's between 15 and 20% of your income? The fourth reason why it might be better to hold off is if you have short-term ownership in mind.
And this has to do with the fact that you may be transferred to a different job, to a different state, to a different town. So, and if you buy a home right now and then soon you are transferred or and change situation in terms of your locations, that may be a situation that you would say, hey, let me find out where the company is moving me, or if I'm going to be changing jobs, and then we start. Because that could also, in a short term, you will not benefit from owning a home, because to really make some good money out of selling your house is between 3 and 5 years. Less than 3 years, you're basically making even, because there are costs of selling, and you need to be at least 4 or 5 years in order to get some equity and make money from the sale of your house.
Okay, so now we're going to move into the 6 easy steps to home ownership. And the first step is that you want to hire an agent. Now, interestingly, we say hire an agent, but actually, although the agent represents you, the buyer, you don't pay the agent. The agent gets paid from the sale of the house that you choose. So they're getting paid by the seller, not the buyer, but they represent the buyer. So the first thing is to hire an agent. And just to give you an idea, whether you were to go with us or whether you were to go with another agent, this is the thing that you can expect from your agent. The first is that the agent educates you about the market. So they tell you where, what are the areas, what are the costs, what are the places that what you can afford for certain amounts, and how is the market doing, and we'll talk a little bit more about that further down. But the second thing is that your agent analyzes your wants and needs. They have a conversation with you. Your agent talks to you about what is it that you want, what is it that you need, what areas were you looking at. Those are the conversations that your agent has with you, so that they can then, and this is the third thing, show you the homes that meet your criteria. So those conversation is necessary so that we can evaluate what your wants and needs are, and then show you the homes that you want to see. And then your agent coordinates the work with other professionals. You will hire an attorney. If you don't know of an attorney, your real estate agent knows attorneys. They know loan officers, that trusted people that they've worked with and that we've worked with. And so we work together on your behalf. And so one of the things is that we coordinate, we work together. And so the fifth thing is that your agent negotiates on your behalf when it comes to the price of the house, how much you want to offer, how much the house is, evaluating the prices in the area, negotiating the price, and then negotiating any repairs that we'll see ahead. But your agent does all of that. And then the sixth thing is they solve any problems that may come up during the process. And it's interesting, Arturo and I sometimes talk about how sometimes our clients don't have any idea how much has happened behind the scenes. But that's our goal. Our goal is to make the process easy for our client, and then we do all of the heavy lifting in the background. And if they never notice it, that's great. We've done a great job then. So that's a little bit about what your agent does. And the second process, that's the first step. The second step is securing your pre-approval financing.
And again, that has to do with the lending institution. And if you don't have one, we recommend, or we tell our clients that if you have a relationship with any lender, with any bank, you go to them and ask about the process, about getting pre-approved. But we also have people that we have known for a long time, people that we trust and take care of our clients in a special way, because they know if they don't take care of our clients, we don't refer people to them anymore. So we do have good people that we work with in terms of lenders, attorneys, inspectors, and all professionals that we have to work with during the process. So securing, and there is two types of interviews with your lender. The first one is just to pass the information about your situation, and then they give you an idea of how much you qualify for. So it's called pre-qualification. Then there is a deeper process when you say, hey, I'm interested, can you help me? Then he will request, or she will request from you your financial information, like job history, income tax reports for the last 2 years, payment, job pay stubs from your job, and authorization to check your credit. Out of that whole process, the lender will issue you a pre-approval, which is a letter sent to you and to us, if you're working with us, that when we find a house, we have this letter saying so-and-so is qualified to purchase a home based on this price because we have checked this and this and this, and he is ready to buy this home. So it is very important that you sit down with a good financial person that could advise you in terms of viewing your whole situation, and will tell you how much you are pre-approved to buy.
The third step is one of the funnest steps
For us
in the process, and that is actually going to see the house, showing the houses, finding your home. Your agent will take you to the places that you have chosen from the criteria that you have asked for. They will send you homes to look at. You decide which houses you want to actually go see, and your agent will take you to those homes to go see them. And that's the third process. The fourth process.
I should say something about the third process, and is that there are so many sites that our clients look homes, but a lot of those sites are not accurate in terms of the status of the home. We are part of realtors. We are part of the multiple listing service, and in that service, we update the status of the home in a daily basis. In other sites, sometimes the homes are left there, but they are already sold. Sometimes even in some situations, they are even closed, but they still show there. And so when you find a home, or when buyers that we're working with find a home, they text it to us, the address or the information, and we make sure that the house is available for viewings.
Okay. And then the fourth spot, so just in case you're keeping track, first one is you hire your realtor. The second one is that you find you get your pre-approval from your loan officer. The third one is where you actually seeing the homes, and then you find one. And then the fourth one is you make an offer and you negotiate. And this is where your realtor can help you negotiate the house. And why don't you say a little bit about the process to find?
Yeah, the process, once we find a home, and by the way, we also place our clients in an automatic search in the areas that our clients are interested. And as soon as the houses hit the market, our system send them to you so that you don't waste time or the buyers don't waste time. And the house may be sold, especially in the times that we were living in the last year or 2 years. So as soon as they hit live, our system, they are sent to you. But once we identify a home, we sit down with you and we do a market analysis of the houses that have been sold in the area to determine how much the house that you're looking at is worth. And based on that information, based on that data, we determine how much we could offer for the house, and comparing value, comparing size, comparing rooms, comparing conditions, we determine this is what this house should be offered for. And we submit the offer and we negotiate. The negotiation is, sometimes it goes back and forth saying, I offer you 100,000, and then the seller said, I sell it to you for 110. Then we go back and forth until we meet at one point, and then we sign the paperwork and we are under contract.
Mm-hmm. There are many things. We realize that buying a home for many people is the biggest investment of their life. And
Yes,
so we understand that it's a scary process. And that's why we thought, first of all, that this workshop would be good, because it would be informative for people. But the other thing we want you to know is that there are different checkpoints that assure that you're not going to get ripped off, that you're not paying more than what the house is worth, that you're not buying damaged goods. And one of those checkpoints is the inspection. So the buyer pays for an inspector. And again, if the buyer doesn't know an inspector, their agent knows inspectors that they know and trust. The inspector represents the buyer, and they go and check the house. Now, they're not checking like for, like the
dirty carpet,
the dirty carpet or things like that, although they will go ahead and list everything that is wrong with the house. But what you want to make sure is that your foundation is good, that your roof doesn't leak, that your pipes are in good condition, things that would really be detrimental to the buyer once they move in. So you want to have the inspector come in and look at the house, and then they will give you a list of things that they recommend. And then we go back to negotiating, and this time we're negotiating repairs.
Mm-hmm. And another checkpoint in terms of making sure that the house that you're buying it's worth the investment is that when we identify the house and we are under contract, the first step is the home inspection, and the second step is applying for the actual loan for that specific home. The moment that you apply, you pay a fee to the lender, between $400 and $600. That fee goes to an appraiser. The appraiser goes to the house, checks that the value that the house, what you're paying for the house is worth of. So if you're paying $100,000, the house has to, the value of the house has to be $100,000. Otherwise, the lender will not give you the money to buy that specific home. So that's another form of making sure that the house that you're buying it's worth the money that you're paying for.
Mm-hmm. Okay, and then the last point, of course, is when you close and you become a homeowner.
And that is the most beautiful time. You get the key, you move into your new home. For the closing, you have to bring a check from that covers the final investment. You have to bring picture IDs, one picture ID, and proof of insurance, because you need to, before closing, you need to buy insurance to cover the physical aspects of your home, like rain and damage to the roof. Those things are necessary. That insurance is necessary in order for you to close on your home. And then you get the keys, and then you move in.
None of the costs at the end at the closing are going to be a surprise to you. So your attorney, your agent, your loan officer all work together to make sure that you are informed and you are aware of the whole process along the way and the costs that you will be incurring at the closing. So none of these things would be a surprise to you. This is just the general information for you to have an idea of what that would be. So, okay, so we've come to the closing. That means we've come to the end of our presentation. And now we would love to hear if you have any questions.
So the fifth step is just buying about the inspectors.
Yes. So the fifth stage is when you hire an inspector to come and see the house, and then they will do they will give you a list of the repairs that they recommend. And in the repairs, you will decide what are the priorities that you really want fixed, and your agent will then negotiate with the agent of the seller, going back and forth, always informing our individual clients what each party wants and needs, and you will come to an agreement.
And that agreement could be the seller saying, we'll do the repairs, we'll fix the plumbing, we will replace the roof, whatever needs to be done, they will agree to do it, or they will say, I don't have the time to do it, I'll give you $5,000 credit for you to do it after you move in. So it could come in different ways, and that has to be accepted by the buyers and sellers. There has to be an agreement.
Now, the other thing is that's important to know is that during that negotiation time, let's say, for example, the seller gets stubborn and doesn't want to make any changes, but you don't want a leaky roof, right? You have 5 days, 5 to 7 days, what we call attorney approval, where you say, you know what? No, I'm not gonna go move forward on this. And you can do that without any problem. You just pull out of the negotiation, you will pull out of the contract because there was no agreement on the repairs. So during that inspection time, you have that 5 days after the contract has been signed. You have 5 to 7 days, along with the help of your attorney, to pull out of the deal.
It's gotta be a legal reason, yeah. And in those 7 days, 5 to 7 days, if we are still negotiating, could be extended, and you don't have the risk of being liable for breaking the contract. So because it's done legally, and for that we make sure that those dates are in between the specific times.
Any other questions?
So you said for the down payment, it'll be a 3%.
Minimum 3%.
3%, but then for the closing, that is still another portion that we have to basically put in.
Correct. In the closing is around 3% also of the price of the home. So with 6.5%, 7%, you could buy the home completely. But there are ways that we could work. If you don't have that closing cost, we could request, during the process of submitting the office, we could ask the seller to pay for those closing costs, so that you don't need to have the money for the closing costs. Let's say your closing costs are going to be $5,000. So we say to the seller, Mr. Seller, we will pay you $205,000 for your home, but give us credit for our closing cost, the $5,000 credit for our closing cost, so that your closing costs will be covered.
And then we'll go into the mortgage, the $5,000. Does that make sense, Gabby?
Yeah, it does make sense. All right. But what are the other requirements? Because I know they have to go through the credit. Credit, I think I brought it up. Last time they checked me, I think I did qualify for about a little over 200, I think it was. But they were only requesting to me to have the down payment, which at that point I was still, trying to complete it. That's why I didn't move on, which is probably about a year ago. But then after we heard about the interest going up and then I just shut down. It was like, don't keep on.
Yeah.
And that was one of the questions that I had. Like, okay, well, should I wait? Should I just, do it right now or do it later? Like, what is it that what would be best, basically?
The waiting in itself has some risk because we don't know if the interest rates are going to stay at 5%. They may increase. Prices are going to be increasing. So in the houses, so far, prices have been maintained steady. They're not increasing as much, but they're still increasing a little bit, the prices. So as time passes, you will need more money to close because the price will close. And we never know if the interest rate is going to stay at 5.5%, which is right now, or it's going to go to 5-6%. Again, the most important thing is when we sit down and talk, we make sure that you are in a mortgage payment that you can afford. That's basic, and that's what we always make sure, that you're not going to be losing sleep because your mortgage payment is going to be tomorrow and you don't have enough. That's our duty as a realtors. That's what we need to make sure, so that that you are not losing sleep again because you will not be able to make your mortgage payment next month. And if you are in a mortgage payment that you can afford, the time to buy is now, because again, houses are going to increase, interest rate may increase, and situations change.
There are two key things to consider when you're thinking about whether you should do it now or wait. One of them is that you are paying rent, or wherever you are, if you are paying rent, unless you're not paying rent wherever you are, as we were comparing, you are then, if you're planning to stay in the place from 3 to 5 years or more, you're increasing equity as you continue to live there and pay the same amount that you would have been, or maybe even a little less or more than your rent. Again, the important thing is that you're going to stay there for enough time for it to get equity, and that your payment is going to be something that is doable for your financial situation. And that's something that you evaluate sitting down with your realtor and sitting down with your loan officer. Did that answer your question?
Yes. Now, what would require to have a cosigner? Like, it would, because I was gonna do it, but with my husband, but now he's out of the picture. So now it's gonna be, I don't know. Like, will I require to have a signer, or is it something I could probably just do on my own?
We will analyze your situation and compare with the area that you want to be in, and see if you qualify to buy a home in the area that you are interested in purchasing. Yes, the cosigner will help you in buying a bigger home, a more expensive home. But remember, the cosigner is not going to help you with the down payment, with the mortgage payment. So again, the most important thing when you're buying a home is making sure that you are in a payment that is affordable, that is comfortable to you. If you and then the whole financial analysis comes there. If you're in a situation, for example, let's say I'm buying right now with a cosigner a home, a more expensive home, because in the future my job is going to get better. I'm due to a job a payment increase in 6 months, and it's going to be very significant. So we consider that, the bank will consider that also, because you are going to be making $10,000-$15,000 more, or whatever. So that will put you in a situation not risking your mortgage payment. But if you are going to be depending on keeping the income basically the same right now, and you get a cosigner, the cosigner is going to help you get a bigger and more expensive home, but the cosigner will not help you making the payment unless it's an arrangement that you have with your mom or with somebody that will be moving in with you.
The other reason would be to get that it would be a good idea to get a cosigner is if, for example, you have passed your credit score is low, but you are more than capable of making the payment for a certain amount monthly, and you just need that help to be able to qualify. And so in those cases, some people do get a cosigner because they're not really putting anything in jeopardy. It's just that because of past experience that they have already corrected, they need somebody to co-sign with them. So that would be another good reason to get a co-signer. But again, I think the conversation about your specific situation would be best in order to be able to give more exact answers.
And Gabby, we don't want you to get the impression that we're against cosigners. We are not. But our job is to make sure that your mortgage payment is affordable. It's something that you can afford, because the cosigner will help you buy more home, but the cosigner will not help you make the mortgage payment. If it's just a cosigner. And we don't want you to be stressed out making your monthly mortgage payment, because there are other expenses when we live. We like to eat.
Yeah. No, but it does make sense.
It
It does make sense. And I guess it's more of a budget thing that I need to focus more.
Totally.
Another thing that I always question was taxes. How does that work? Because that's what scares me. I think that's the one thing besides the mortgage, like, how do taxes work?
That's a great question. Because the reality is that the taxes influence your mortgage payment, sometimes even more than the actual price of the house. So the area that you decide to choose also has, the taxes are higher in some areas over other areas. So you want to be able to consider the taxes when you're making the decision of where you're going to live and how much your house is going to cost, because the taxes are factored in. And again, it won't be a surprise because as you're looking for your home and you're talking to your loan officer and you're talking to your realtor, they'll be able to put the numbers together for you before you even make the offer of how much the payment would be per month. And then you want to stick to that when you're looking for the home. If you've already decided, okay, I do not want to pay more than this amount, they will include the taxes in evaluating your monthly payment.
In fact, the monthly payment includes the principal and interest, taxes and insurance. They are all included in your monthly payment, the mortgage monthly payment. So when we find a home for our clients that they like, before we submit the offer, we evaluate how much the house is worth, and two, we make an estimate of the mortgage payment so that they know what they're getting themselves into. So before we actually submit an offer, because our job is to make sure that you will be able to afford that monthly payment. That's basic, and that is the most important thing for us.
And we would always recommend that you include the taxes in your monthly mortgage payment. Some people choose to do them separately. I feel like that's riskier, especially if you have a concern about taxes, because then you have to come up with the money at the time that they're charged. Whereas if you did it as part of your mortgage, then it just comes out monthly with your mortgage. It's the same price that you're paying every month. You know exactly how much you're paying every month, and so it's already taken care of by the mortgage company. They pay their taxes when they're due. So we would always recommend, whether you go with us or anybody else, just make sure that your taxes are paid by the mortgage with your mortgage payment. Any other questions?
Just maybe one more.
Yeah.
The thing is that there's times where I would hear my mom like, oh, well, my mortgage just went up, or, obviously taxes go up. I think she does include it with the mortgage, but how often does that tend to happen? Or is it something like if interest do go up, I'm guessing taxes are going to eventually go up. Is that going to be something that's going to be affected later on the mortgage itself
Yes.
every month?
Not every month, but every 2 years. And depending on the county, that you will get a tax increase every 2 years. And that will reflect in the mortgage payment, because let's say your taxes increase by $1,200 a year, your mortgage payment will increase by $100 a month. That is the only thing that should increase your mortgage payment, because we make sure that the interest that you're getting is fixed. That will not change. Principal and interest payment will stay the same for the 30 years of your loan. The only thing that may increase your mortgage payment, yes, are the taxes that the counties every 2 years or every schedule that they have will increase by a certain amount, and that will change your mortgage payment. There is a possibility all the time that we recommend our clients, and next month we are going to have seminar
With a tax assessor.
with a tax assessor lady that will tell you how to fight our taxes, how to make sure that your taxes they're not ripping off on your taxes, but basically, and that there are things that you can discount, exemptions that you can claim from being an owner from your county, and that will keep your taxes affordable. So there are always things that we can do. Sometimes they don't work, but yes, we have the option of fighting the tax bill when it comes to us.
And the reality is that anyone who's a homeowner has to pay property taxes, right? And there's no escaping the property taxes, even if you're a renter, because when the landlord gets their taxes increased, they pass that on to their renters, and so rents increase. So there's really no getting around property taxes, except that if you're the homeowner, you can also apply for homeowners exemption, where that's one of the exemptions that exists for property owners. And so they might be getting the exemption, but they're also charging the taxes over to their renters, because that's how they're making their money as well, or making their money back. So there's really no getting around the property taxes. There's two things to remember. One of them is the exemptions, and the other thing is that you're, as a homeowner, you are also building equity and wealth by having your home. So
if your mom wants to know if she's got the homeowners exemptions and other exemptions, she could reach out to us, and we will make sure that those discounts are being applied to her bill.
Okay, that's nice.
Yep.
And for the down payment, it does need, because I think last time that I spoke to someone, they said that in order for me to give the down payment, obviously they're going to go through the bank, go through the statements, go past history. So it's a thing that I have to have that money there in, a minimum of a max of 3 months or so. Like they have to see that money was in the bank for 3 months or more.
Correct. Or you can get it as a gift. Let's say your mom is very nice and she gives you $5,000 toward the purchase of your home. So she could write a letter. There is a form that the lender will provide to you and says that your mom has to fill in, and says, so-and-so, mother and so, and I am giving her $5,000 toward the purchase of her home. I got the money from my account and I transfer her to their account, and that's totally legal. It's called gifting. It's called giving your parents or it's got to come from a relative, but yes, you could receive a gift to buy a home. Or your 401k money saving, you can withdraw that money from there, and it will not be penalized. They release.
That's the one thing and I forgot. Good thing you brought it up, because right now I have 401k that it's not on hold, but our company got bought.
Mm.
So it's on the side. So I'm thinking, should I probably, obviously, I don't think I have a lot. Maybe I think about 15 or a little bit more than 15, but I'm like, maybe I could use it for a down payment on a house. And then the rest, I could probably keep on investing or transfer it over somewhere else or put something, investor, whatever it is. But if I do use that 401k money, do I get taxed on it, or
Not
what
to
are the
buy a
like
home.
fees?
Not to buy a home. They give it to you without taxes. You had to show them the contract before they release the money. You had to show them an accepted contract, and they will release the money when they see that you are really buying a home, that you have a contract to purchase this home, and they will release the money. They will not be penalized, and you won't need to pay it back because it's invested in your home.
Also, I have to give back the money to the 401k.
No, you don't have to give it back. They won't close the account. They won't give you everything.
No. Yes, I wouldn't close it, but definitely you use part of it or a little bit. Like I'm able to give in, not cash, but use the bank for half, and then probably the other half, the 401k.
Yep, you could do that.
Interesting. Okay.
Okay. Any other questions?
I'm good. I think I'm the one. I think I'm good.
Awesome. Well, we're glad we could help. All right. Well, if there are no other questions, just so you know, when you registered, if you haven't been getting our weekly newsletter, you will be getting it. And in the next newsletter next week, you will get a recording of this class, so of this seminar. So you'll have all that information, and you'll have that. You can pass it along. You can do whatever you want with it. Pass it along to anybody who you think it would be helpful for. Our information and contact information will be there as well. And if you guys have any questions, or if you have any concerns that maybe you did not get a chance to ask today, you can go ahead and text us or email us, and we would be happy to help you. The next month, as we were saying, we do have a seminar with a tax assessor who will be talking about the property taxes. And if you know anyone who is a homeowner and who's wondering, yeah, your mom can come, and is wondering if they're taking advantage of the exemptions that exist in their county, have them check in. We have a workshop every third Thursday. We have one at 7 o'clock in Spanish, and then at 8 o'clock in English. So we try to do things that will be helpful to our community. And so we've had all kinds. We've had people talking about investments. We've had financial advisors. We've had attorneys talking even about wills and testaments. We've had all kinds of things. If you guys think of anything that you would love to see, let us know, and we can find someone to do that workshop for you. I hope this was helpful for you. If you guys don't have any more questions, then thank you for coming in and being part of the seminar. The seminar is going to, just so you know, this recording is going to go to over 900 people. A lot of the people don't come in because they know they're going to get a copy of it. And the advantage of being here is that you do get to ask questions. So I'm glad that you guys were here, and I hope it was helpful to you.
Have a good evening.
Thank you. You too. Thank you.
Have a good night.
Bye.
Bye-bye.
You too. Bye.